Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of June the 28th, 2010. Now, to start our presentation this week, we are of course going right back to the US dollar index to see what we're looking at for the week ahead. Now again, my short-term indicators are off the screen here. This is the Forex weekly outlook. We're looking at a broader look at the market for the week ahead and our ability to forecast this going forward based around the Vantage Point software. Now, important thing I want to point out here is that all of our indicators, and throughout this presentation, we're going to be basing our analysis on majority rules. And what I mean by that specifically is that the number of indicators that are pointing in a certain direction is likely the way the market is going to go, except in certain cases. So to start this off, we can see that we have our triple EMA crossover has taken place to the downside. This is a fresh cross on the US dollar index. There's a number of concerns with this, but the reality is we've hit a yearly seasonal peak in the 89 level. We've got this crossover taking place. It's been under steady pressure. Our predicted medium and long-term differences are both excessively negative. Our predicted MACD is crossed over the trigger, and it's also crossed below the zero line, as has one of our most important indicators. Our predicted true strength indicator has also crossed the trigger and is also moving below the zero line. So this trend is very likely to accelerate to the downside. That's what this is telling us. So again, we don't want to overcomplicate things going into our Forex trading. We want to look at this and base a number of our trades on this. Now, with the US dollar index showing downward pressure, this is likely to have a positive effect on Euro US, a negative effect on US CAD, positive effect on Great Britain US. These are just a couple of examples of how it works. Now, the main currencies that make up that US dollar index are the Swiss franc, the Swiss krona, the Japanese yen, the euro, the CAD, and the British pound. So all those currencies are likely to see some strength this week. So we're going to get into that more into the presentation. But looking at the US dollar index, all of the main indicators from short, medium, and long-term perspective are all in agreement that the US dollar is going to continue to move lower. Now, with that said, we're going to pull up the equity markets and see what's happening there, because the equity markets have been a driving factor in the Forex market. Now, we can see that the triple EMA crossover is making that cross, but our indicators are not completely in agreement here, and this is what I want to point out. We have our triple EMA crossover trying to make that cross. Our long-term predicted difference is sitting right on the zero line. It's not crossed over to the downside, but the medium term and the short term, even though I don't have the short term up on here because I really don't need to look at that, the short term difference is essentially probably down in here somewhere. Our predicted MACD has crossed the trigger, however, it's running flat along the zero line. The predicted true strength indicator from Vantage Point has actually crossed the trigger to the upside, and it's sitting right at the zero line, and it is not crossing to the downside. Again, this week, this is a critical indicator as to what's happening. My opinion is, based on this, the majority of the indicators are saying it's going to go lower, but there's a couple of very clear signs here that are red flags to me. This suggests to me that the S&P 500 and the other global equities are likely to start recovering this week, not heading lower. Now, we may get a push initially to start the week to the downside, but that at this particular junction is telling me that if this takes place, more than likely what's going to happen is it's the US dollar index that's going to continue to plummet lower, and the equities potentially, based on what I'm seeing in my analysis here, are likely to start correcting and moving back higher. So very important that we take this into consideration, looking at all of these main indicators, staying away from that short-term market noise and focusing more on the medium term to longer term outlook as to what the probability is going to happen based on the analysis. And again, that true strength indicator, the fact that it's refusing to cross that trigger to the downside, and this indicator, again, it can only be found on the Vantage Point software, has been incredibly accurate. So again, when we got this crossover to the upside right here on the predicted true strength indicator, if we go up to our charts, we can see the market then went essentially from the 1050, 1060 area all the way up to 1120 20. Now that's a huge trade on the S&P 500. We're talking a huge, absolutely massive number of pips, or excuse me, full points that we're able to pick up on that using that. So for now, we're not getting that cross to the down, which is definitely. So again, with these indicators, with the mixed signals like this, and the fact that everything's holding above the zero line, again, my view is the equities are going to recover this week. The U.S. dollar is going to move lower. Now let's take another main indicator here, our light sweet crude oil. What's happening here? We have a very again, somewhat mixed, but the majority of our indicators are still pointing higher. We can see that the market's come down, hit the 18-day predicted moving average several times and bounced away from it, and it continues to move to the upside. The predicted medium and long-term differences are holding above the zero line. Our predicted MACD has crossed the trigger, but we're still above the zero line, and the predicted true strength indicator from Vantage Point, we have a clean signal from there. However, we are entering somewhat overbought territory. Now, my position on this is that crude oil, again, if my analysis is correct on the US dollar index, that it's going to start its descent lower, equities are going to move higher, then essentially light sweet crude is likely to move higher with a weaker dollar. So we want to take all of this into consideration, and then we want to apply it to our different currency pairs. Now again, we're doing a broad look at the entire market here using a number of different modules from Vantage Point. It's very important that we take all of these things into consideration. So looking at crude oil, this again reaffirms my position. The dollar is going to weaken and the commodities will start to recover a bit. So we'll see how this plays out. There's definitely going to be some volatility. Now, looking at gold, another major commodity that now you remember that I've talked extensively about this correlation to the US dollar and the light sweet crude contracts and pattern recognition and what I think is going to happen. My position has always been that crude oil, or excuse me, gold and the US dollar will move higher together, then the US dollar will spin off and start moving lower, and gold will continue its move higher. That's exactly what's happening here. We've closed slightly lower this week, but we're in record territory in this 1260, 1270 mark, but we still have this buy signal from Vantage Point. Our predicted medium and long-term differences are turning positive above the zero line. Predicted MACD is somewhat flat, but the predicted true strength indicator from Vantage Point right here, we can see that it's bouncing off the trigger, pointing back to the upside. So my position is we're going to get a little pullback on gold, and then gold is going to continue its aggressive move higher. There's nothing in the charts to tell me differently at this point, but again, there's always possibilities of whipsaws when you're at these kind of historical high points. But the last thing